Chairman Jay Powell seemingly put to bed the idea of negative interest rates, but the president is going to hammer that home, we know. Is there a chance we do see negative rates in the US?
Well, you know, I certainly hope not. I was relieved and not surprised by Chairman Powell's comments. I mean, negative rates are destructive to the first principle of capitalism. I mean, it's a terrible idea. He was very gentle about it, but he said it hasn't really worked in other places. You don't have to look far. Japan, Germany, where this idea is not a good one. It's just insane. I mean, the idea that, okay, you know, here, borrow money and I'll pay you for it is just fundamentally wrong. And, you know, you have a lot of academics discussing it, but it makes no sense on Main Street. And it is a very scary proposition that has never proven to work well anywhere, and I couldn't be more against it. And I don't think the chairman will be swayed by it at all. He's got an arsenal. He'll deal with it, and the Fed will do everything it can, you know, through this crisis, which is really a crisis.
Even with rates as low as they are, though, Jimmy, never mind going negative, they're already sort of razor thin, above zero. How are banks, boutique investment banks and the regionals faring?
Well, banks are really challenged at this point in time because, as you point out, it's bad enough as it is. We have a flat, very low interest rate environment, and obviously a positively sloped yield curve is where a bank can really perform the best. So they're going to be challenged from their income statement on basically where low rates are and have been, and it has been further accentuated. If it was to go negative, then, you know, it would be just disastrous, really, in my opinion. But the other reality is we don't know for how long and how deep and how problematic this is going to be. But we know it's going to be bad. And the reality of it is, unlike '08, everybody keeps referring to '08, this has nothing to do with '08. You know, '08 was created because there was too much credit, too much of an extension in credit. And not just the banks, but other lenders were really at the core and caused the problem by this excess credit. This is just the opposite. The banks very well may be a path out and a solution to the problem. It's just that it's going to be a deep slog. And the fact that you can lose, I don't know what the number is, 20 to 40 million people for a period of time, you can pay them more where they don't work, that's just not a constructive environment. And it's you know, the bank stocks obviously have suffered dramatically. You know, I'm a great believer that you buy banks below book and you sell them at 2.5 times book. It's a strategy that's worked for a long time. The issue now is what is book, and obviously I think there are real values in the banks themselves. I'm not going to name which ones, but I think there are values. It's just that you've got to reacquaint yourself to that may be the real book, and it isn't the idea that 70% book, so boy, they're going to go back to book. That's not the case. I think the reality of it is this is going to be a very difficult slog, and I think the banks can be part of the solution to get out of it, frankly.
Well, let's try and figure out what banks you're talking about from some other clues, Jimmy. Obviously, the last time we spoke to you was the consummation of the Piper Sandler deal. Since then, in the general sphere, we've had the massive BB&T SunTrust deal. But will there be another round of consolidation in weeks and months to come? When do you see it happening?
There will be. It has been going on really since '78. When I first started in the business, and certainly the last 18 years, and Sandler and now Piper Sandler has done its part to try to further accentuate that consolidation. It will continue, but not for a while. There is little to no M&A discussion going on because there's, you know, it's just not a focus to anybody right now. It will when we get out of it, and I don't know whether that will be in 3 months, 6 months. You know, you tell me when we're going to have a vaccine. You tell me when people will go back to work. And that's why I think this notion of people that were surprised the other day when Stan Druckenmiller said there's not going to be a V-shaped recovery. Well, obviously there's not going to be a V-shaped recovery. And until you start to get people back to work, until you see the economy functioning, they're getting more of an answer to what the real credit issues are going to be, there won't be much M&A discussion. There will be a lot of discussion on raising debt, raising not trust preferred, but preferreds. Those type of corporate finance functions are going to be very active, and banks will bolster their balance sheet with that. I think there'll be not so much straight equity raised, and then before you see that, you'll see banks cut their dividends, which the banks were in very good shape going into this, and they're in much better shape than where they were in '08. But it's going to be a while before we see a healthy M&A market return.
And that's the time, I suppose, for the likes of you to be looking around. It's also the time for certain banks to be raising cash. Obviously, we saw PNC Financial selling all of its BlackRock stake. The thinking is it's preparing to buy basically any smaller competitor or even non-competitor. Can you give us any kind of an idea of what might look good? A horizontal kind of deal, a vertical kind of deal, potentially even?
Well, I think there's a variety of things that can look good. I mean, I think the CEO was on record back in '18 to say, when banks get below book, then come talk to me. And I think he's also said that he'd look to do a deal comparable to the Nat City deal that they did in '08. In fact, Sandler was involved in the advice to that deal. And so I think that if you look at it on a relative basis, where financial stocks have gone versus where he was able to liquidate his equity position, I think makes a lot of sense. It bolsters his capital. He's going to be in a position to look at a variety of banks and possibly finance type of companies. And I don't think that they'll move that quickly. I think that this thing is going to be a longer slog than people think. I think having capital and not worrying about earnings, which is sort of what this transaction looks like to me, is the right strategy for now in the next several months. And then we'll see. And if this is a much longer, more difficult slog than people think, there may be greater opportunities for him, and he'll be opportunistic. But I think it makes a lot of sense. I think that there are going to be a lot of opportunities over the next 3 to 6 months, and I don't think it's something he has to do immediately. But he'll certainly be ready to act.
Jimmy, one question on the richness of the stock market. Given all that you've said and your obvious outlook, along with that of many investors, why are equities so rich right now?
Well, the Fed can push the stock market around. It has a harder time with the real economy, and that's where the issue is. So, this notion of the Fed's got your back, just pin your ears back and buy stuff. That's dangerous because they can provide some liquidity relief, and they can provide a lot, but at some point in time the real economy has got to come back, and I don't know that many business models that operate real effectively with zero revenue for the next X amount of months.
All right, Jimmy.
We have 40 million people. Go ahead.
Well,
40 million people out of work. How many will come back? And those are real issues. And I think that the stock market's probably ahead of itself in certain places.
Okay, and I'd love to press you more on it, but I do want to ask you about this match coming up. It's the match revisited, if you like. It's a bit bigger than the very first match between Tiger and Phil. Basically, I suppose what everybody wants to know is who wins. Where do you put your money?
Well, I know, Vonnie, you probably have the Irishman in mind, and I root for him every week. But I'm going with the underdogs. I think Matt Wolff and Ricky Fowler are going to surprise some people. Ricky's won the pro member 3 times. Rory's won it once. And I think the young guys are probably practicing a little harder than the old veterans. And I think they're going to. I would go with I'd go with the wider odds with the younger guys.
I don't know. You can't knock the older veterans,
I haven't won
Jimmy.
many golf bets.
Jimmy, very quickly, obviously golf is the first thing to come back. It's the first sport where you can socially distance, and Seminole, I'm sure, has been the first to reap some rewards. What do you see for the sporting industry going forward, and for just reopening the economy in general? Will it be easy?
No, it's not going to be easy, and it's going to be very jagged, and you have different states saying different things. But the first thing I think we've got to, well, I'm not a doctor, okay, and I'm not a lawyer, so giving those 2 caveats, we have got to get people back to work. We've got to get kids back to school. We've got to basically say, okay, let's look at the people that are most vulnerable. Are you of an age like mine or older? Are you overweight? Do you have respiratory issues? And those people need to be really, really careful and sequestered, and they need to work from home, and they need to, they need companies and need to be respectful of that and help them along the way. But they need to really take care of themselves. But the notion that we're not going to open the schools in California for a year, I just don't see that as being the right answer. Now, I'm not, maybe there's things I don't know, but I just think we have to get people back to school, and we have to face this and do it as safely as possible. But the longer this lasts, when people thought, okay, we could just wait around for a vaccine, the devastation that will be done and is being done, and particularly the further you go down the economic scale, the more, I think the cure could be far, far worse than the problem. And I don't mean to be insensitive to it. I am not a doctor. But we have got to get people back to work, and I think whether it's Ohio or Georgia, they seem to be taking the right steps forward. And I think we have to be very careful, this being a political football, and it's really unfortunate it's an election year, because we need to come together and figure this out.